Hey everyone, welcome to the Options Moneymaker Q&A session. Today is March 24th, 2021. I'm Mark Dannenberg, and Aaron Rumley and Michael Kastner are with me also. We're going to be hearing from them in just a little bit as we get into the Q&A. Before we get to the Q&A, we have several people in our community that are recently new members. So I want to just give a quick overview of what the purpose of this Q&A is. We have a mantra that is learn to trade and trade to earn. So we're very focused on helping traders who have a desire to really learn how to trade options or learn how to trade futures to go through a learning program, really start to understand the basics, and then immerse themselves in the process of continuing to learn in real time. We believe that you should not actually try to trade live money, which is the whole trade to earn, until you have some experience under your belt. So if you're trading options, we believe you ought to be trading options in a paper account until you get familiar with the strategies that you're using. If you're trading futures, we believe you ought to be trading in a sim account until you get really comfortable with the strategies that you're using and how to follow the signals that we teach and support. So learn to trade, trade to earn. We also recognize that in the learning process, there are questions that come up. And there's not always a good way in a digital world to ask those questions where you're learning from an online course or you're learning from a downloaded course. So we provide an opportunity to join us every couple of weeks, and we make ourselves available to answer whatever questions you have related to the strategies, techniques, and programs that we teach. So we might be talking about the adaptive entry system by New Cycle Trading and Analytics. We use that every day in our live trading room for identifying trends and identifying signals to enter when we're trading futures. Now, the adaptive entry system is also an excellent tool for options trading. We primarily use it in our live trading room trading futures because it's a great way for us to be able to teach a lot of in-depth understanding about the adaptive entry system. The live trading room, if you have questions about that, it's an excellent environment for real-time trading and support. Aaron and Michael every day are using the adaptive entry system. They're calling out signals and helping people understand the reason that that signal is valid, when signals are not valid, when to enter, when to exit. It is a real-time trading environment, and you can follow along initially in a sim account, and then when you're ready, when you've learned and felt comfortable with your own trading performance, you can do it with live money. We have a futures trading education program that is all about learning the risk and reward of futures. I think futures is an excellent way to trade and make money. If you have been an options trader before and you are primarily a day trader, futures, I think, has a lot of advantages over day trading options. If you're a more long-term trader, not investor, but long-term trader, options is an excellent way for you to hold positions for a few days, a few weeks, and take advantage of a bigger trend. By the way, the adaptive entry system is excellent for being able to help you identify those trends also. The personal trading plan is a tool that we developed that can prompt questions. We can easily help you understand how to use it, but it was developed for tracking your personal profit performance. And if you kind of think of it as a daily, weekly, monthly profit loss statement for your personal trading business that has a feature built in of forecasting what your 12-month income could be based on your current performance. It is an excellent, and I consider it to be a vital tool for really being a successful trader. And then, of course, we have the Profit Builder Plus program for options education. It's a comprehensive options education program, starts right at the very basics of options and graduates all the way through some of the more advanced techniques that we use, including management techniques for options. So we feel like we have a very comprehensive program that will cater to whatever you have an interest in trading. So present those questions. You can put your questions in the chat box. We're happy to answer those questions. While we're waiting on some questions, I want to talk a little bit about the personal trading plan. We update it at the end of every day. In our live trading room, we've been profiling 3 different versions of trade performance in the live trading room that we code into the personal trading plan. So we're going to pop over and take a look at the personal trading plan. So the first thing we do is we look at our performance. So Aaron has created this really robust tool for us to be able to track the detail of our performance every day. So trade by trade, every trade is recorded. These are off the adaptive entry system signals. We record the time of the trade, whether it was long or short. Remember, this is all NQ, which is the NASDAQ 100 futures, what strategy it was, what the profit and loss was. These are stated in point increments, and each point it has a $20 value to it. So we record all the detail throughout the day, and then it's summarized on the daily summary. And then what we look at is 3 different categories. There's 2 here and 1 over here, 9:30 to noon. So we're evaluating through all of the history that we've recorded, which is now, oops, I didn't want to do that. Sorry, hold on just a second. Okay, that's going to take a minute to load. So I'll get to that in just a minute. But the 9:30 to noon category is a category that we track for people who don't want to spend a tremendous amount of time in their trading. So this is about 2.5 hours a day. And we take all of the adaptive entry system signals. So today, for example, there were 20 points of profit that were accumulated. And as I said, each point has a $20 value to it. And then in the 7 to 4 category, so these are Eastern times, 7 a.m. to 4 p.m., where we trade only 2 of the 4 signals that the adaptive entry system presents. We trade the trend bias and the trend continuation signal. And you can see day by day what the performance was. It's going to be a little different than the 9:30 to noon because we're trading longer and we're only taking 2 signals. Some days it's more favorable, some days it's less favorable. Today was 22.5 points, again at $20 a point. Now we have some other categories in here. I can scroll over and you can see we have a variety of categories that we can measure. And that's because we record every single trade. But the 3 categories that we record into our personal trading plan as a way to show you the effectiveness of the personal trading plan in building a financial forecast. 3 categories are the 9:30 to noon, all signals, 7 to 4, trend bias and trend continuation. And then a category that we just started in January of this year. These other 2 categories started in July of 2020. The tracking. And in this category, these hours correspond to the hours of our live trading room, 8:45 a.m. to 4 p.m. Eastern. And we take all of the adaptive entry system signals. There are 4 of them. And in addition to that, we also take fractals, which we talk about quite a bit in the live trading room. Today, we accumulated 96.25 points of profit. All right, so we have that data. And then what we do with that data is we go to our personal trading plan. This is simply in a spreadsheet format where it's very easy for a trader, no matter what category they're trading, to plug in their performance. So for example, today, the 9:30 to noon category, which we have labeled as LTR all, and up here you can see live trading room, 9:30 to noon, AES only. Today was Wednesday, and so over here we put in $1,200. The reason that's $1,200 is because one feature of the personal trading plan is that it will scale contracts for us. There's a natural increase in the number of contracts traded, always starting with 1 contract, and then as the account grows, the personal trading plan will advise you that 2 contracts is okay to trade, or 3 contracts is okay to trade, or whatever number you want. We limit the number of contracts based on our own individual bias, individual appetite for trading more or fewer contracts. Some traders may stay at one all the time. Some traders may put in 10 contracts as their max. Whatever you as an individual trader put in this category, the personal trading plan will not graduate beyond that number of contracts. So we've capped ours at 3. And so today we had 20 points of profit at $20 a point, which is $400, and we're trading 3 contracts. So it gives us a profit of $1,200. There were only 3 trades today, and those 3 trades resulted in 3 contracts per trade, so 9 contracts traded. And then we lock our history by putting in the number of contracts we traded in the contract override field. Now I'm going to come back to what we do with this forecast information here in just a minute. In the 7 to 4 category, the total dollar value of performance was $1,350 with 52 contracts traded. So if we go back and we look at that, that was 22.5 points at $20 a point times 3 contracts. That's where we've scaled it. If you've not scaled up to 3, you would be at 22.50, 22.5 points at $20 a point, and you wouldn't have a multiple of 3. We traded 14 trades, and each trade had 3 contracts. So that gives us 52 contracts that we traded. And then in the last category, which is the 845 to 4, we did $5,775 and 87 contracts. And of course, that's because we had 96.25 points of profit today, and we did 29 trades. So that's 96.25 points times $20 a point, and 3 contracts that we have scaled up to in that category also. This category just started on January 4th of this year, so it's a newer category for us. So now I'm not going to spend a lot of detailed time on this, but I want to just quickly go through what does all that mean. You have and most of you don't have multiple categories, multiple different variations or iterations that you're trading. You have one personal trading plan. I'm showing you 3 different variations of it. So in the 9:30 to noon category, we've been at it for 37.6 weeks. Our personal trading plan is designed as a 52-week plan. We've been at it for 37.6 of the 52 weeks. During that 37.6 weeks, there have been 63 losing days. Now we highlight the losing days. We want to be very aware and realistic and transparent that there are losing days, there are losing trades. There can be losing weeks, but we highlight the losing days because by default, then every other day is a winning day. And so then what we do is we calculate what the run rate is. The run rate is what our history has given us. So if we continue to trade in our same fashion, the same methods we've been using, and the same performance success, then we should be able to continue to mimic our run rate. And the run rate is a combination of winning trades and losing trades. In this case, in the 9:30 to noon, our run rate is 21.76 points on our winning days. On our losing days, we have an average losing days of 42.87 points. However, these are not just straight averages. These are averages of the losing and winning days that also take into account the frequency of losing days per our history. So 63 days of losses factored into 37.6 weeks. And it also takes into account the number of winning days as a factor over the number of weeks in our history. So they're not just pure averages, which gives us a very realistic go forward forecast. So if we've been able to achieve a certain level of performance that says our winning days are going to be far greater in number than our losing days, and also they're going to be they're going to have an average that we can work with, we can transfer those values into our forecast. So we are 37.6 weeks into a 52-week plan. The balance of our 52-week plan requires us to say, well, what do we think we might be able to average in the rest of our 52 weeks. And so we translate those values into our forecast fields. Everything in our history is highlighted in blue, and that's what drives the winning day and losing day values. Everything that is between today and our 52-week mark is going to be driven by these values. So the values are going to be the same. We evaluate them, we actually enter them separately, but we evaluate them, and then we're capped out at 3 contracts. So bottom line is, if you enter your data and you evaluate your run rates and you translate your run rates into your forecast, then what we see is, if we max out at 3 contracts, that the income is forecasted to be $131,174 for a 52-week period. Now that started with $5,000 in the account. We've been doing this now, as I said, for 37.6 weeks, and the forecast is 131,174. I think that's a pretty decent income off of a $5,000 investment, and in this category at least, about 2.5 hours of time commitment on your part every trading day. The second category, which is 7 to 4, we're also 37.6 weeks in. We have 62 losing days in this category. The run rates are 28.01 on our winning days and negative 41.57 on our losing days. We have those values now in our forecast field. I did that a little earlier today. We also are capped at 3 contracts as our maximum contracts, and the value then, the forecasted value, is $213,165. That is an account also that started with $5,000. Now there's 2 ways that we control the number of contracts. One is, you can just decide as you gain experience what you're comfortable with in terms of a maximum number of contracts. But then once you decide that, the personal trading plan is scaling your contracts based on the balance of your account. And the way we control that is, we assign a value: how much, what percentage of the balance of the account are we willing to allocate to the margin requirement for contracts. We use 10%. So 10% of the balance of the account is then made available to allocate to margin, and each contract requires $500 of margin. So in this case, we're only allocating $1,500 of margin. We're using $1,500 of margin on every trade. Margin doesn't define what our profit potential or risk of loss is in terms of dollars. It's just kind of the ticket you have to buy in order to play in the futures game. Brokers require a certain level of margin. We're working with Infinity Futures. Their margin rates are low at $500 per contract. So in order for me to trade 3 contracts, I have to have $15,000 in the account. 10% of 15,000 is 1,500. That means that 3 contracts are available for me to trade. I'm going to exaggerate the example here. I'm going to put in 50 contracts, and you can all of a sudden see the number of contracts that would scale. Oops, I need to lock that one. The number of contracts that would scale if we were willing to trade up to 50, which I'd never recommend to anybody, but I'm only using this as an exaggerated example. That means tomorrow we'd be trading 30 contracts. That's because there is enough balance in the account now, because we've grown the account. There's enough balance in the account so that 10% of the balance of the account would provide enough to support the margin requirement for 30 contracts. So once again, I don't recommend doing that, but I just wanted you to see how that scaling feature of the contracts is. And you can also set this 10% at whatever you want. We could set it at 5%, and all of a sudden tomorrow you're not trading 30 contracts, you're trading 15 contracts, because now we're only working with 5% of the balance of the account in order to allocate to the margin requirements. So I'm going to leave this at 10. I think that's a reasonable conservative number, and I'm going to leave this at 3. I think that that's also reasonable. So in the first category, 9:30 to noon, We're going from 5,000 to potentially, in the next few weeks, we finish off a year with 131,000 of income. Potentially in the next few weeks from 5,000 to 213,000 in this category where we're only taking the trend and trend bias. And then the last category, as I said, we just started in January of this year. This is going to be a calendar year category. We also started with 5,000 here. We have 10% set as our capital allocation. We have a 44.85 average positive day and minus 51.4 negative day. We've been at it now for only 11.6 weeks, and we've had 16 losing days. So all of those numbers go into each other to, or work together to give us a positive winning day average and a negative losing day average. So put those values in the forecast. Obviously, we have 41 weeks left to go, so there's a lot more. You're going to find that these numbers, these run rate variables, change more frequently in the early months. The numbers in the other two categories aren't really changing that much from day to day, but we're still early on, 11.6 weeks. When you get out to 4 or 5 months, in your personal trading plan and you have 4 or 5 months of history, these values start to stabilize a little bit more. But initially, based on those values, I've got those same values in the forecast field, cap of 3 contracts, and as of right now, the 12-month forecast is $378,120. I think that forecast might come down. I think we need to get a little bit more experience rate in our run rates, but that's okay. It's an initial starting point, and every day we're going to update our actual performance. We're going to have wins. We're going to have losses. This week we had a pretty healthy loss on Monday. We had a really nice win on Tuesday and a nice win today. So it's always going to be a mixture of winning days and losing days. And all I really care about, and the reason that I wanted to create the personal trading plan, is this number right here. If by the 6-month mark, that forecasted number is 300,000, it still is a realistic number based on your personal trading. I'm not saying right now that we're going to hit 378,000 in 12 months in this category. I don't know what it's going to be. I can only tell you on the last day of the 52nd week, just like the other two categories. But this gives you an example of trading from 8:45 to 4, the live trading room hours. Trading from 7 to 4, only 2 categories of signals. Trading from 9:30 to noon. And the variables, each of these accounts that's being traded started with $5,000. And so we've got anywhere between 131,000 and 378,000 as potential income. So we're very excited about this tool. We think every trader should have this tool. It's not expensive at all, in my opinion, and it's one of the best planning tools you could have as a trader. So just last thing here, and then let's get to the Q&A. One of the reasons we create the tools that we do, one of the reasons we have a live trading room for live real-time support. And yeah, there's a cost involved in you participating in these, right? Nothing's free. And if you really want to make a commitment to this as part of your part-time or full-time income, there's a cost involved in doing it. But we find that a lot of traders struggle with the emotional side of risk and losses. And the personal trading plan is going to help you see the big picture. If I have a tough day, Monday was a tough day, I would say, in several of our categories. Uh, we just plug our numbers into the personal trading plan. Yeah, it was a losing day, but then we look at the 12-month forecast, and it gives us a better picture of what the overall big picture view is. It helps us know when is enough enough. If you have a goal to hit $200,000, for example, and let's see, if you want to hit $200,000, for example, and you're trading in the 7 to 4 category, well, you know that if you hit 28 points of profit in a particular day, you could stop trading because that is your run rate that's helping you get to the goal that you have. So that's one of the ways we use it, and we think it's very effective at that. It's, what's a reasonable profit and loss target for the day? It helps you define that, and what's your potential 52-week income. As you just showed, the income potential, depending on what combination of time frames and signals you're using, is anywhere between 131,000, 378,000 right now. Those numbers will change on a daily basis, and we update that here every couple of weeks when we are doing the Q&A. We're also now posting the personal trading plan online. Dorothy and Aaron put that together and sent out an email about it this week. So you can view it every single day. Each account we started with $5,000, and for as little as just 2.5 hours a day, 9:30 to noon, $131,000 potential income. Now, I just have this note out here just as a point of reference. According to the U.S. Department of Housing and Urban Development, the median household income in the U.S. is about $78,500. So these are some really good values, depending on how much time you want to invest and how much effort you want to put into really learning how to effectively be a trader. So we provide the futures trading education, learning risk and rewards, options education, adaptive entry system, live trading room, personal trading plan. Those systems and tools together were created so you could build a personal trading business. And we're happy to be here to help you do that. So Michael, Aaron, let's go ahead and take some questions.
Mark, Gavin's asking, why is the stop loss set at 20 points when the profit target is only 10, with a max with many at 5 only profit? I'm assuming that's what he means. Have you tested with a 10-point stop, 10-point loss, or other parameters? Obviously, you have a high percentage of winners, but your risk reward seems
awful.
Awful, yeah.
Awful, yeah.
Okay, all right.
Yeah. So let's get the second part after I answer that.
Also, when you immediately place your stop to 5 points within only a couple of ticks from that level, it seems like a large percentage get stopped at just the 5 points.
I think that's true, and we're happy with that, Gavin. So here's the thing. We've been at this for years. And when we first started trading futures, we did an extensive amount of evaluation on what a reasonable stop loss is. We tested 10-point stop losses. We tested 30-point stop losses. We even tested 50-point stop losses. And what we settled on, based on data rather than assumptions and emotion, because we try to separate assumptions and emotion out of what we decide to do. But based on data, we determined that the optimum stop loss was 20 points. Now, the 20 points, when you talk about risk to reward, I'm just going to take your words and say you are, and you may not be intending to do this, Gavin, but you are implying that every loss is 20 points. So I'm going to pull this up. The spreadsheet is thinking. Aaron's got so much in this right now. It just takes a while to think here, but not all of our
Also,
losses.
tagging on that is that the suggestion of a 10-point stop, if you've truly traded NQ, 10 points is just too tight of a stop to allow room for NQ to do its thing and have its movements and then get you a profit. 10 points is, you'll be stopped out a lot more than I think you anticipate.
So, Gavin, 10.5 points is an example of a loss here. It wasn't 20, 8.25. There's a lot of losses that we take. There weren't a lot of losses today, but there's a lot of losses that we take that aren't 20 points. Also, you can set your parameters at whatever you choose. What we have them set at 20 as a protective stop and 10 as a profit target allows us generally to get in and out of the trade quickly. We also are not looking for big cycle runs, but I'll say something about that here in just a minute. We're looking really for getting in and getting out, because we have a personal trading plan that tells me that, hey, if I have 28 points in a day, I can make $130,000. Aaron's been talking more recently, also in the last couple of months, about something we refer to as AES 20. We're not specifically tracking it in a personal trading plan that we put online, but AES 20 is a way for us to just grab 20 points a day and be done trading in generally within the first hour of trading. So I understand the question. We get the question a lot because most people who are just first coming into our community have I will say, an erroneous understanding of risk to reward. They don't really understand the risk. They don't really understand how to evaluate the risk versus the reward. So if you just purely look at, well, you're only taking 5 points and you're going to lose 20 on your stops, and you don't understand all of the detail and history in it, it's very easy to draw the conclusion that you have, or to raise the questions that you have. And it's a valid question, Gavin. When I first started getting involved with this, and Aaron and I were kind of working through the details of what the loss stop should be and the profit target, what we were looking for was not only for ourselves, but we were also looking for something that would allow newer traders to have relatively consistent success. Once you have traded successfully and you really are excited about your results and you want to expand your results, or you want to trade a little differently, do so. But we have found that this combination of 20 and 10 with a lock of 5, which immediately reduces us from a risk position to a guaranteed profit position, is extremely valuable and consistent. We also look at averages across a variety of categories, and we can see that if you traded from 8:45 to 4, all signals plus fractals, we've been tracking this now for 194 trading days. And that's using the 5-point lock and the 10-point profit target. It averages $874 a day per contract. We know that there's been 41 losing days, and the win-loss ratio is just under 75%. Those numbers work extremely well, and you'll learn that when you're trading it a little bit. But again, we're providing some guidance as to where we think you should start, something that will, based on our history, give you a consistent level of success. And the last thing I will say about this is there are trades, the trending trades and the trend continuation trades. We also track whether it moved 30 points, 20 points, or 10 points, and we track what the full cycle is. So if I look at our averages, all of this data is driving our decisions. The fact that we have the data, we can calmly and confidently make decisions on whatever we want to do. But here is an example of holding for the full cycle. We track the full cycle. If you traded from 7 to 4, track the full cycle, your average winning, your average points per day is about 390 per day. You have a 28.9% win rate. So it sounds really good to hold for the full cycle, but when you look at the data, it doesn't support it. And if you were to say, well, I don't want to just take 10 points, I want to take 30 points, okay? Same time frame, 7 to 4, holding for 30 points is going to average $336 a day, and you got a 36% win rate. So what we find with the NASDAQ is it has these bursts of movement. And the bursts of movement are frequently, most commonly, in 5 to 10 point increments. You can have trades where it will immediately pop to a 5-point zone, 5, 6, 7 points. You can lock in 5 points. Some of them go to 10 points. And then it kind of stalls, it rethinks, it retraces, sometimes goes all the way up to a 20-point stop, and then it dances around. And what we've done is we've already gotten in and gotten out.
Mark, can I add something
Yeah,
to
yeah,
this?
absolutely.
So as Mark said, this is a starting point based on the research that we've done, but there are variations that you can do. Now, for coming from a data standpoint, it's very then cut and dry. If all we record is if it went to 5 or if it went to 10 or if it hit our stop. There are variations. There are plenty of people that when it gets to 7 points, they start to lock in more and they continue to lock in more along the way. Or maybe they have a trailing stop that triggers at 10 points. So if this thing keeps accelerating, they may take more than 10 points. We're using very data oriented, which gives us a more conservative approach to forecasting of whether we're only taking 5 or we're only taking 10. But there are plenty of times. I know there was like a day where Michael and I were just watching it go to 9 3/4 so many times on a trade and then coming back and taking us out for 5. And of course, there was plenty of opportunity to lock in 9 points on those trades, but we were recording 5 because we're limiting ourselves. Again, just giving you a starting point on, and you can trade it that way because it's productive, but giving you a starting point of either it comes back to 5 points or it goes on to 10 or it takes us out at our stop.
So just to add one more factor to that too, Aaron added a feature in our tracking tool that shows us what the biggest loss was for the day, what the biggest drawdown was at any point in time for the day, and what the biggest profit was for the day. When we are recording all trades from 3 a.m. Eastern. When Erin comes in, she goes back and she replays the overnight to look at that. We're not live trading starting at 3 a.m. But we start live trading at 8:45 a.m. But we're recording from 3 a.m. Eastern until Erin and Michael say, okay, we're done for the day, which is generally sometime between 3 and 4 o'clock Eastern. We record every single trade. Now, there are days where we have people in our community who are saying, oh, I'm up 30 points for the day. It's 10:15 in the morning. I'm done for the day. Okay. We continue to call out the signals. We continue to show the trades and we continue to log them. And what we're putting into the personal trading plan is whatever the end of day value, the full day value. So
Like Thursday last week, I think there was a 70-point max profit, but then we ended down 6.5. You
yeah,
would have just
I was looking for a couple of those. And when Aaron added this feature, it was very telling. Well, here's one that's smaller. We were up 37 3/4. Now, the personal training plan will tell you, well, that's probably going to get me to my goal. Maybe I should be done. At the end of the day, we actually finished down 11.5 points. There was a bigger one here, Aaron, that I really caught. Well, here's one. We were up 50 points, cumulative profits at one point during the day, and we finished the day down 52 1/4 by looking at every single signal. So my view of this as a trader, as a business owner who has a desire to be transparent with what we're showing and what we're telling and teaching you, I think we report conservatively because, as Aaron said, we're not improving our 5-point block to 7 or 8. We're just taking either 5 or 10, and then we might have personally, might be up 113 points at one point, and we finished up only 93. That's not a great example, but you kind of get the idea of what I'm talking about, that there are days where we are significantly ahead early in the day, and the rest of the day didn't pan out very well. And so that's why I believe we have a fairly conservative approach to what we report. And to me, my last comment to you, Gavin, is to me, all of that data-driven analysis is way more important than just a simple risk to reward analysis that a lot of traders don't really understand um, how to interpret that.
Mark, just to make sure, I don't know if he's asking also about then why you have a 10-point target. I don't know if you covered that or not, because we lock at 5 and then, yeah,
Yeah, the 10-point target is part of that optimum performance and the analysis that we did. And we were able to do it because Aaron put together this data tracking tool for us. And so we consider 10 to be a reasonable target, but you can set it at whatever you want. show them, Aaron, you can explain this a little bit more. The profit target, you want to explain that?
Oh, sure, absolutely. So you can put in there, and really what I've personally researched is a 20-point profit target is kind of that ideal profit with the amount of losing days for an 8:45 to 4 time frame. It shortens the amount of trading that you do. And so I didn't tell you this part, Mark, but the personal trading plan that we put online, I did include a 20-point profit target and then
Oh,
a
excellent.
60-point on the losing side, since we've been talking about it so much. So I do have that personal trading plan out there as well. So it's 20 points on the positive side, but if you're down 60 points, you'll stop. That you have a stopping point. There is a stopping point on both ends. And I say this frequently in the live trading room. A lot of traders struggle on when to call it quits, and I feel like we've really kind of narrowed that field down. But with the 20 points on the profit side, you can see in the past 194 days, there have been 11 losing days. And because we're still using the normal rules where you lock in 5 and it comes back and takes you out for 5, then you're out for 5. But if it goes on to 10, there's actually days that you'll end up with more than 20 points. So if you go to the daily summary, I know yesterday was 23, I think. Yeah, 23. So we're actually averaging close to about 19 points a day. This average here isn't taking into account the down 60 as a stopping point, because I know most of us did stop on Monday at down 60 instead of continuing to trade all day, which is kind of the nice thing of the market's just misbehaving. You're not stuck trading it all day trying to figure out what your stopping point is. It's giving you a stopping point on both sides of it.
I think that's an excellent feature that Aaron added. If you want to know basically what you could make interpreting all the data, if your profit target was 20 points, well, here you go. $375 a day is the average for the last 194 trading days.
And I just threw this in there. If you want to go to the monthly summary, we're not finished with March. We have still have a week left. And if you scroll all the way to the right, it'll show the summary for this, the 20-point trading plan. So it's at 255 3/4 points for the month so far, which is over $5,000 for the month. And we're not done with the month. We'll see where it ends. But so far, just using that 20-point plan and not having a stopping point, you're up $5,000 for the month. And what I mean by not having a stopping point, I mean on the negative side. So that's, in my opinion, for the limited amount of trading that you have to do for this to have $5,000. I mean, there's your $60,000 salary for a year.
That's
on one
solid.
contract.
Yeah, per contract. So you can scale your contracts, and if you're using a personal trading plan, you scale up to 2 or 3 contracts. That doesn't require any additional units of work on your part. It's just adding another 1, 2, 3 contracts.
A lot of times we're done before market open with this plan.
Yes, she says very proudly. She sends me a note and says, "Okay, I'm done."
I'm done.
Working on
Hit
closing.
20.
What's that, Michael?
Working on closing early on, right? We'll
Right,
talk
yeah.
about that. We'll talk
Closing at
about this
9:15. Yeah.
You'll see the picket line outside tomorrow.
I think you didn't even close until 4 today.
We're excited.
We were having fun.
Rob's asking, could you show the 11 to 4 all entries and 12 to 4 all entries?
Now, Rob, you want all plus fractals? I'll assume you want that. If you don't, just let me know.
And
Take out the 20.
I highlighted red so I wouldn't forget that.
Yeah, that was smart. So Rob, 11 to 4, all entries, all signals, including fractals. 194 trading days of history is averaging $560.31 a day. per contract, 45 losing days out of the 194. So about a 74, just over a 74% win-loss ratio. And then you also wanted 12 to 4. 192 trading days, 449.71 per day, 52 losing days, just under a 74% win-loss ratio.
Kevin's asking the trend, the TB plus point trigger. Is that using a trigger set at 10 points or a simple stop at 10 points? So if you're talking about the TB plus 10 point trigger, that's in column B. That has the 9:30 to noon and the 7 to 4. That's our trend bias and continuation trades, exactly how we trade them in the live trading room, where when they get above 5 points, we lock in 5 points. If they come back and take us out, it's 5 points. If they continue on to 10, it's 10 points. So they're trend bias and continuation trades, exactly as we trade them in the room.
Jack's asking, is that a 20-point target for the day or a 20-point target per trade? That'd be per day.
For the day,
Per
Jack.
day.
Yeah. So
All the trades are still the same exact rules, everything that we call out in the live trading room, which is using a 20-point stop or a fractal if it's closer than 20 points. Locking in at 5 points once we have more than 5 points of profit. If it comes back and takes us out for 5, we're out for 5. If it continues on to 10, we're out for 10. So it's not adjusting any rules. That means if you're holding 15, let's say, well, let me change that number. Let's say if you're holding 18 points and you take another trade, you're not closing it at 2 points for profit. You're doing the same rules, where if you get out for 5 points, you'll have 23. If you get out for 10, you'll have 28 on the day. Stan's asking, have you done any analysis regarding what type of days result in the greatest losses? For example, are trending days worse or choppy days? So personally, I think the term trending and choppy is a little bit subjective to the time frame and each trader's interpretation of it. I have seen us in my opinion, on what I would call choppy days, just nailing out the profits, no problem whatsoever. On slow, sluggish days, I know we had that not too long ago. Michael was talking about that we were in a correction phase and that based on just Elliott wave alone, he wouldn't touch this. But because of AES, we were just wringing out profits, no problem, because AES was able to handle that type of choppiness. Same with trending days. I've seen us struggle on trending days, and I've seen us, again, like today and yesterday, just really nailing out the profits. The only type of analysis I've done is on days of the week. We were kind of looking at that, and there wasn't enough of a difference between the days of the weeks to have any sort of conclusion from it. They were all profitable and relatively close to each other.
David's asking, what's your balance right now? You can see on the personal trading plan, David, depending on the category. So the 9:30 to noon category, the balance is right here in the balance column. So as of today, it's 91,000, just under 91,400. As of today, in the trend bias continuation, it's about 150,000, and then we're about 65,000.
And these are all taking into account commissions and fees too. So what you see in column E and F are the net numbers. So the net dollar amount in column F, and then the net, we just make it into a point amount. So that's why they're not exactly quarter increments based on NQ.
Jack's asking, is there a column for the maximum drawdown, example, multiple days of losses?
Not cumulative maximum days of losses. We don't have that. when you're trading in sim mode for a couple of months, you start to get a sense for what your win-loss ratio is, your own personal trading win-loss ratio. You can track your trades and you'll start to have a better understanding. And then you have access to the personal trading plan now online to be able to view, and you can scroll back and you can take a look at, consecutive losing days. There's consecutive losing days, definitely, which means we had some challenging weeks. But you can scroll back and you can take a look at that and get a sense for what that looks like.
I know we've talked about this a lot in live trading room, but I believe, if I remember correctly, for the 20-point profit and the 60-point losing on the stopping side, there weren't 2 days in a row where you had losses with the 60-point stop out. It really ended up significantly reducing. It's like a 91% win rate from your day to day with that plan.
Well, yeah, and it's not a significant concern when you have 194 days in your history and there have only been 11 losing days in 194. So
Right.
I wouldn't be at all preoccupied with cumulative losses. Listen, losses are a reality in trades, in days. What Aaron identified here is a method that's using the time frame of the live trading room starting at 8:45. She's not taking trades before that. It's using all 4 of the adaptive entry system signals plus fractals, and she, researched and looked around and found a category that, for the benefit, especially of newer folks, minimum number of losing days. And like she said before and laughed about it, she calls me and says, okay, we're done trading. I'm done trading the AES 20. I've been at it for 45 minutes. You're usually done it within an hour, right?
Yeah. I mean, there's been a couple days we've had to trade 2 to 3 hours. It's been exhausting, but yeah.
Yeah. So that kind of leads us to Bob's question. Can the system be profitable trading 1 hour per day on 3 days per week and 3 to 4 hours on 2 days? I'm going to say yes, but you'd have to do a little research and figure out what that looks like. If you were going to be doing that, my guidance would be focus on AES 20.
Michael's asking, does the 12-month forecast profit numbers include fees and commissions as well?
Yeah,
Yeah.
all of our forecast is based on a net amount.
So when we put our performance in, this is the number multiplied. This is the number of points multiplied times 20 times 3 contracts. And then we put in the total number of contracts traded, so that over here, when it's calculating the net points and the net profit or loss in dollars, it's taken into account fees and commissions.
Mark, can you go to OMM's homepage?
Yes, give me just a minute. Oops, that's not where I want to be.
So Gavin's asking, how do I access this personal trading plan online that you mentioned? So you go to optionsmoneymaker.com. And then at the top in the menu, you'll see news and AES results. So you click that. And then it says, there's our video for it, but if you see AES LTR trade results in the top left corner under categories, and you can access either the live overview of the performance by clicking there or the daily performance spreadsheet by clicking below it. And so that daily performance spreadsheet at the bottom will take you there. It says to view the daily performance spreadsheet, click here. You click on the click here and it will take you, or you can, and I just recommend bookmarking this, optionsmoneymaker.com/AES-results. And then there's the 4 different personal trading plans, the 3 that Mark usually covers on the AES reviews, and then the 20, the plus 20 minus 60 that I added in there too, which forecasts out, if you can go all the way to, what's it forecast out to? So that goes to $197,000 in 12 months. And again, this is stopping at 20 points of profit, or if you're down 60 points, you stop at 60 points. And then below that, there's then all the individual daily results as well. So that's all available to you.
Do some of your own research. You can, scan back and see, how many consecutive losing days. It's data, right? And for those of you who are serious about building a trading business, this is something that you can make use of.
Gavin's asking, can I dive into the individual trades for each day as well?
We have 194 days, and that's just too much data to have on there.
Yeah. So Rob says, if you do X trades per day on average, how much can you expect to pay in broker fees and trade? You'd have to talk to the broker, whatever broker you're using. Just generally at Infinity, you're probably going to pay, I don't know, somewhere around $450 per round turn. You'd have to talk to them about that. And then Rob's also saying, please touch upon the trade room cost and the software cost. So in general, big numbers, Rob, if you want to go through the education and so the education is about $600. That's the futures education. That's a one-time cost. To download the personal trading plan is about $200. That's a one-time cost. So that's about $800 up front to invest in your trading business. On a monthly basis, I'm rounding off. The adaptive entry system software is $600 a month, and the live trading room is about $400 a month. You can start in the live trading room at $400 a month and follow along with Aaron and Michael while you're sim trading for 1 or 2 months. And then when you're ready to get the software, you can sign up for that. So the first month, if you went all in and you subscribed, monthly subscription to the adaptive entry system software, monthly subscription to the live trading room, and purchase the education and the personal trading plan, if you did all that on day one, it's about $1,500 investment for your first month of trading. And then it's about $1,000 a month after that, roughly, which we've always tried to position our pricing so that it is recoverable in terms of a return on investment in generally 1 to 2 days of trading. Now, it won't always be that way, and it depends on how long you trade and what signals you're trading. But generally, on a monthly basis, we've tried to have a pricing structure that allows you to recover that investment in 1 to 2 days of trading.
Steve's asking, is there any particular price action or other market behavior that you have been able to ascertain that may allow one to avoid the 60 point plus down days? Anything that would allow one to limit your trading and loss on those days? So I personally think a 91% win rate, and that's a net number, and you can look at the amount of losing days on that personal trading plan that we talked about, the 2060. There have been, gosh, I think it's 13. Let me look at it real quick. I'm pulling it back up. But there are 13 losing days that we have tracked, and it's a 91% win rate. I don't personally think that there's anything to look into refining that anymore, especially because those 60-point losing days aren't happening back to back. They are very rare. 91% of the time you will have a 20-point winning day or more. So that means 9% of the time is when you're having that 60-point loss. It's just not anything that I feel warrants looking into. I talk about this quite a bit in the live trading room, that starting off, that 60 points might not be an option for you. And that makes sense. If you have a smaller account, when you're starting off, maybe you don't want to go straight to that 60 points on the downside. So we have also evaluated using a 20-point on stopping side. Trade of the day, and
Did I lose you, Aaron? Michael, you still here?
Yes, I'm here.
I think we lost Aaron.
Yeah.
So her point is you can adjust to whatever you want. She's identified the 20-point profit target and the 60-point loss target as kind of an optimum level again. Remember, we are not here to tell you exactly what you should set your parameters at. You are starting on a journey of opening up your own or starting your own personal trading business. And you will ultimately decide what works for you. One of the ways you decide to work or what works for you is by sim trading for 1 to 2 months.
can
And
you
you
hear
may,
me now, Mark?
yes, yes. And you
So,
may come back and say to yourself, well, Aaron's saying use 20 and 60. I'm more comfortable using 20 and 20.
and
That's an
that
adjustment
works.
that you make.
And you can start off that way. It forecasts to a $76,000 12-month forecast. While that's not as large as having a 60-point on the negative side, if you're 20 and 20, that's still great. Taking $5,000 to 76,000. So maybe that's how you start off, and then as you grow your account, you can evaluate then growing your stopping point, and maybe you then go to 40 points, which has a $110,000 forecast for 12 months. And then once you're, again, grow your account to comfortable point, then you settle on that 60 points as your stopping point.
Yeah, and Gavin's got a really good point here too, that if you trade in sim mode for a period of time and then you're ready to trade live dollars, you can follow the exact same signals, take the exact same trades, but you can trade the micros starting out, which have a lower profit to you in terms of dollars, but it also has a lower risk to your account value. So that's another way for you to kind of graduate yourself into trading live money.
Rob's asking, the 20-point plan is done in 1 to 3 hours, but are you able to trade 5 or 6 or more contracts on the 20-point plan?
Trade as many contracts as you want, Rob. I think you need to gain some experience with it first. And I would always recommend that you start with one contract and graduate your way up a lot using the personal trading plan to increase the number of contracts simply based on your account growth rather than just arbitrarily saying, hey, it's Monday. I had a great week last week. Today I'm going to trade 5 contracts. You want some sort of a systematic approach to increasing the size of your positions. We've shown and demonstrated and proven that by using that gradual systematic approach that it works. In fact, Aaron pointed this out to me. Where was it here? Oh, so we were trading one contract starting on January 4th. Remember this, Aaron? We were trading one contract.
Yes.
And we graduated up to 2 contracts because we're using 10% of the balance of the account. Graduated up to 3 contracts. And just after we graduated 3 contracts, we had one of our biggest losing days we've had. Okay? That set us back. And the personal trading plan said, nope, start over with one contract. And that's what we did. And now we're back up to 3 contracts again. And despite that big setback, which was actually a pretty negative day for us, we have a pretty healthy go forward forecast. So I think that's a great example right there. Gerald's asking, will we be coming out with auto trading in the near term future? We don't have any type of a date that we would be releasing auto trading yet to our community of traders. We are close to putting auto trading online for our internal team. In fact, we are actually hiring a team of traders. We have our first new trading team member on board now, and we're going to be trading auto trading as within a proprietary trading team using AES, using another system that I've been testing since late September, and using another system also that Craig from New Cycle Trading has been testing. So we have a lot in the works, but we need to make sure that everything works in live mode with our own internal trading team before we would ever think about releasing it to our community. And then we need, some user-friendly dashboards on it. So there's a lot of work that's involved in making that happen. But first step is for us to trade it within a prop trading team, and we'll see how that goes. But we're probably a couple weeks away from being in that position to trade it internally. We like what we see so far. Pretty excited about what we see. So yeah, we'll see how that goes, see how that works. All right, I don't see any other questions or thoughts out there. So Michael and Aaron, thank you for being here. Thanks for the work that you do supporting our clients every day in the live trading room. And folks, listen, if you're really serious about doing something with trading, it can be one of the best businesses you could build if you immerse yourself in learning. And Aaron and Michael are 2 outstanding guides for you. They've been trading both for a long time, many, many years, and also they've been trading AES so that they are the key subject matter experts on AES. You will learn a lot from them. And if you've ever thought about opening your own business, you got to think about trading as a business. So just real quick, 60 seconds. I had this conversation with someone the other day that if there was a franchise trade show and every franchise offering, it was available there, and you could wander around and talk to different people about buying a franchise. And off to the side, there's a table with Michael and Aaron and I sitting there, and come up and talk to us and we'll say, well, yeah, so we can put you in business as a trader, and it's $1,500 for the first month and about $1,000 a month after that. And here's the potential: you can make $130,000 to $370,000 a year, and it just requires that initial investment plus about $5,000 for you to trade. Now that seems like that would sound pretty good. And then when I say to you, well, as a business owner, by the way, if you do this, you don't need clients or customers. You don't need a sales force. You don't need a fleet. You don't need an office or warehouse or inventory. You don't need employees. You don't need all of the normal stuff that a small business would need. It is a very cost-effective business to be in. We have some people who will say, oh, $1,000 a month, that's way too much. You shouldn't be trading that. That's my opinion. You're not right for this. We're not right for everybody, and that is not something you shouldn't participate. But for $1,500 for the first month, plus a computer and internet, and then about $1,000 a month for your education and support, plus a computer and internet, you have the potential to make, as long as you have $5,000 of base capital, then you have the potential to make 130 to 300, just over or just under $400,000 a year based on our history and our experience. So can't guarantee any of that, but we will do everything we possibly can to help you succeed. Okay, thank you for being here, everybody. Really appreciate you being part of our community. And we'll be back again tomorrow morning, 8:45 a.m. Eastern. Thanks, Aaron. Thanks, Michael.
Thanks.